Hey guys, this is Bruce Marshall from Simpler Trading with the nightly update for Wednesday, May the 3rd. Happy May, happy Wednesday, and more importantly, happy Fed Day. We had a crazy day, as you can see here on the right. This is the ES. Um, we had a Fed meeting and another policy decision, rate hike, and this is what happened. And as we can see, so this the light gray is the overnight session, and we're chopping, not much happening, kind of up down a little bit. The Fed announced the decision right there. We went straight up and then straight down and then straight up and straight down and straight up, touched our tree line, almost to the tick, and then came down and down, 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 touched our fire line almost to the tick as well. That's a big range between these two levels. A lot of resistance here, a lot of support here. As you can see, this was yesterday. We came back down that same level. But what happened, and I'll kind of zoom in on this a little bit. So what happened, if you didn't see this, of course, it was very widely expected we were going to get a 25 basis points or 1/4% hike, additional hike. I believe this was the 10th one in a row I believe that they've done. I think that's right. And this is the highest level I think I read that we have been since 2007, right before the 2008 little real estate blip happened. So kind of keep that in the very back of your mind. I don't know if there's a big correlation there, but it's interesting, right? Definitely, because we know rising rates slows the housing market down, all that kind of stuff. But as far as today, we're above 5% now on the target rate, and that was to be expected. There's a lot of there's a Fed Watch tool and sites that track the expectation of what the Fed's going to do, and there was like a 95% chance that there was going to be a 25 basis point hike today, and that's what happened. So we were thinking that would probably kind of all be baked in, and it kind of was here. This is normal stuff. You do typically go up and come back down and kind of center in the middle somewhere. We talked about that in the main trading room right before the announcement. I said, historically this is what's going to happen. We're going to gap up 10, 20 points. We're going to come back down, flush 10 or 20 points, and kind of end up back in the middle until Powell starts talking. Now, Powell commentary I think started, I guess, about right here, and he had a big job cut out for him to kind of navigate the language of what he was going to say, because the market is already pricing in rate cuts later this year, which is a little crazy in my opinion, but that's kind of what the market was expecting. And Powell said, he did kind of talk out of both sides of his mouth. He said, basically, we're not where we want to be yet. As far he said, I think exact words were, we have a long way to go in reaching our objectives and all that kind of stuff. But he did kind of leave it open, saying that that there would likely be a pause, not a cut, but a pause, which is good. That's fine. And nobody was expecting them to continue raising rates too much more anyway. So this is kind of all what we were expecting. But of course, the market did not like that, and we sold off pretty hard, after that. And again, we know that there will be, it'll be data point by data point, such as the next CPI, PPI. We got payrolls on Friday, got all kind of stuff coming up, and and all that will go into the equation of what they do with rates over the next several months. So I don't think we're going to probably get a whole lot of decision, or we might get a whole lot of indecision actually from the Fed over the next couple of months. So again, we shall see. Now, as far as this today, this flush looks pretty brutal. Let me put this out. Let me put this in perspective. If you're trading this, check this out, because we are trading it every day. And this is what we're up against. This free fall, straight down, rip your head off, rally straight all the way up here. 4068 to 4206, and then straight down, straight up, straight down. This level, this fire line, should hold, and I'm going to go on a limb here. I guess, I guess it's any guess is as good as any other at this point. Let's say this thing holds and we start working our way back up here. That would be ideal. We take this out and come down, take that out. This thing could turn ugly very quickly, and I don't know. There will, what a difference a day will make. Tomorrow will be, all this will be digested overnight. The international markets will see it, and kind of give their opinion essentially in what those markets do. So this thing may not get bad. Again, we'll see. Tomorrow also we have Apple reporting. That's kind of the last of the big tech names, and we do still have a fair amount of earnings coming in over the next couple of weeks. But this was kind of the biggie today, was the Fed meeting. So again, this is a tough place to call right here. And as far as trading this stuff, you can make a lot of money if you're right on direction, but the key is you can't be right for long because you have to switch gears. I mean, in other words, if you get long here and you're riding this thing up, and it's great, you're making all kind of money, and then you get flushed down and you think this is going to keep going, so you bail out here and then you miss all this, and then you think this is going to break, keep going higher, and then you flush here and you go, okay, now I got another shot at the next run up, and then you get in front of that, etc. This goes on every day. We talk about it. We deal with it every day in the markets here, in the trading rooms at Simpler Trading, in the main room, and I run the bias room as well. And we're still trading. We're still making money. It's tricky. It's tricky. You got to be fast. You got to be nimble. All that kind of stuff. You got to be careful and don't swing at every pitch. We're waiting for the right setups and that kind of thing. And that's just the way to trade this market right now. But other than that, there's not a lot to say, but we wait till tomorrow, see how the other markets, what their take on this is, how those markets trade in the overnight session, what we look like tomorrow, what Apple does tomorrow, what payrolls do on Friday, and then hopefully, we start kind of getting a little bit back to either trending up or trending down a little bit. So we shall see. But again, the key takeaway is to be careful. Don't overtrade this market. Be very careful on your setups. Don't take every trade because it's hard to get on the right side of this thing for very long. And that's just a 10-day chart, and it's been like that for months and months now. But I do think the light is at the end of the tunnel now. The Fed won't keep raising too many more times, and that will kind of slow the volatility down a little bit. So with that, let me wind it up. Hope that helps. Hope it makes sense. If you need help or want to get in with us and do a little trading and see what we're doing here, come see us at Simpler Trading. Come in the main room or come in my room, the bias room, and we're trading in both those rooms all day long. So thanks for time. I appreciate it and hope to see you in the rooms. And I will see you next Wednesday when I do the next update on this. Thanks for time. Take care.
Without Simpler Trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency. It's one of the things that won me